Okay, so PNC Bank, ticker PNC. Here's a monthly chart from barchart.com. I've got it opened up on one of my paint programs. I've underlined a double bottom here. Every one of these vertical lines shows a year. So we're looking at a 10-year chart. This double bottom, to me, looks extremely conspicuous. And the more practice that I've had, the more obvious this stuff looks. And I recommend the same as well. Just having a lot of practice and experience. The only way to get really good at a topic, obviously, is to become immersed in it, to spend many hours poring over the details and the granularity, whether it's mathematics or computers or cars or anything or cooking. And trading is certainly no exception. It's a couple hours a day, or at least an hour a day, every day for many years. And so certain things sort of start standing out. And one of the things is these long-term patterns. So the double bottom here, and you don't even need that much time to start to spot these long-term patterns. It's really when you want to develop a trading system or a trading strategy, that takes a lot of time because you're really going to figure out what kind of a trader you are, how it fits with your personality. Every personality is different. Some people, they just hate losing and they can't like wrap their brain around any kind of loss. So they have to take a very super sort of strict approach and probably not even get into risky markets, probably get into trading bonds or something like that's not really risky. But as you stretch out on the risk reward scale, then you might be able to take on a little bit more risk, maybe have a little wider stops. It's really tough if your stops are so tight that you don't give these trades a chance to play out. So but yeah, it's really all about time. But these long-term patterns and whatnot can be seen pretty quickly, so but yeah, so this is the double bottom. You see how it bounces off of 80 bucks. It doesn't have to be exact, but it generally looks like a double bottom. Bounce up and then bounce right around the same level. So I've circled here the ADX and the ADX modified. They're very similar, obviously, but sometimes I can see clearer on one of them as opposed to the other one. So it's nice to have them both up. These red lines, the little upside down mountaintops here, we like threes and twos. When this happens, a lot of times it's a two. We'll see two upside down mountaintops at this, generally the same place. And the fact that it's happening on the double bottom, obviously, as we've seen, it was very predictive. So same thing here, two double mountaintops, the red lines, or you could look at the upside down mountaintops of the blue lines. What is interesting is generally the price will follow the blue line. So if the blue line is going down, the price generally goes down. If the blue line goes up, the price generally goes up. But I don't know why. When I first started learning about this stuff, I just was responsive to the red line. And the red line works really well with regards to the commercial hedgers, the COT report, which we'll go over another time when we're talking about commodities. But yeah, so I normally look at the red line. So when there's, I call these pinches, when you've got a double pinch up, so you've got two mountaintops in a row, double pinch up on a double bottom, that is something to be looking at. So let's say we've got, let's say we're at so let's say we're drawing this. Excuse me, that was a little bit crayon-like. So yeah, so right there, so see how the blue has pinched up, has started coming up. It formed, fully formed. So you got higher, lower, and then higher, then lower, higher, lower. So we fully formed that mountaintop and that upside down mountaintop. So we fully formed these two pinches Upside down for blue, right side up for red, and we love that, especially on a double bottom. So when you see a double bottom, yes, we could take that shot and maybe it bounces again. So maybe it goes up a little, then it bounces down a little. You might get out, take a profit. It might hit a stop. You might raise your stop and take a little profit. It might bounce off. You're at break even. It might even go a little bit below like break even, but not hit your stop ideally. But generally, um, we want to trade as if this could be the move, right? So you don't want to be so tight that you don't allow the move to kind of play out, because this is a spectacular move. But yeah, a double bottom, triple bottom. Double bottom a lot of times becomes a triple bottom, but this obviously was a double bottom that played out. So let's look at how we could have spotted this as a general move. Okay, so right here, the stock RSI was showing some divergence, some bullish divergence. So you see how this went past the zero line, and you see how it's flat there? The same thing here, it's flat here. That means we're below the zero line. I don't know exactly what number we're at, but we're below the zero line. Same thing here. We're below the zero line. Here we didn't even hit the zero line. So we're actually getting higher. Our lows are higher on the stock RSI. The RSI is pretty flat. I'd say slight divergence. This is a teeny bit higher. This line is a teeny bit higher than this line. That's definitely slight divergence on the double bottom. And that's not divergence. That's CCI. But the slow stochastics, that is divergence. This is why I use this, because sometimes you won't see any divergence on any of the other indicators, but then boom, you'll see it on the slow stocks. So really nice, phenomenal move. Went from 80 to 160. That was double your money in about 18 months. Phenomenal move, and that's just trading the underlying of an $80 stock. It's not like you were trading options. I mean, options could have been even more lucrative. However, there's also potentially greater risk and greater volatility when you're doing options. And so that's a total separate series of videos is talking about stock options and whatnot. But just in terms of the underlying stock, phenomenal trade. You get in near 80 at the double bottom on divergence on a few of these indicators, right? 3 of them. The ADX is showing a double pinch up, and that's a good opportunity. You put your stop in here at about 75-ish, so below these ranges here. If you wanted to be really loose, you could put it at like 69, 68, but that's really, really loose. It just depends on what kind of a trader you are and what kind of a move you're looking for. But this was a phenomenal move. You doubled your money in 18 months if you stayed in the whole time. But even if you caught this first wave, you're looking at least 35 to 45% profit. We went up to 130, before we dipped a little. But even here, if we played it above, if we just played this monthly chart, guys, we did not close. We didn't have an end of month close below the exponential moving average until like April, till right here. And so whether you got out here or here, if you decided to stay, really confident long and say I'm going to stay in until we close below the EMA, then that's still not bad though. You're still looking at 135-ish on an exit, 140 on an exit, 130 on an exit, in that range, still phenomenal. So it all depends. It all depends on what kind of a trader you are, how aggressive you want to be, how some people might get out here. That sort of star there can show some indecision. Also, this is a second leg. I call these legs. So this is one strong move up, a little dip here, and then a second leg. So once you're at 2 legs, I generally think you're probably going to see a retracement of some percentage. Sometimes you see a third leg though. So when it comes to price moves, I like to be moderately conservative and get out if we catch two legs, to get out after that second leg. But when it comes to patterns, a lot of times I like 3s better than 2s. However, 2s, as we've seen here, worked extremely well. This double bottom on Bullish Divergence, a phenomenal trade. I believe any way that you played it. I love getting the trades that you play it one way or another way, and you're generally going to be rewarded. So this definitely looks like an opportunity where you can generally be rewarded if you were a bull at right around 80 on that double bottom. And PNC Bank, thanks a lot.